Joining us now from the Iconic Conference for his reaction, Evernote co-founder and now managing director at General Catalyst Partners, Phil Libin. Phil, it's great to see you again. Your comments and your reaction to Mark Cuban saying that companies are waiting too long to go public, and when they do, their best years of growth are behind them.
You know, I don't think in the history of business has anyone timed anything exactly right, exactly perfectly. So things are either you wait too long or you go too soon. In the past few years, companies probably have been waiting too long. It's going to adjust. Now companies are probably going to go out a little bit too soon. Hopefully the pendulum gets closer to the right answer soon.
Well, I was just thinking back in the 90s, it was just the opposite. A lot of companies were coming too soon to the public market. Have we gone too far the other direction now? Is that what Mark's suggesting, and do you agree with that?
Yeah, I think that's probably right. I think it's always a question of either undercorrecting or overcorrecting. I think great companies have almost a moral obligation to be public. The public company contract is important for the world, important for society. I think everyone wants to see more great public companies, and we'll have to figure out what the right timing is. It probably has been a bit too long in the past few years, and it'll correct.
Well, we've seen that companies like Fidelity and T. Rowe Price, they still have access to the companies that would have gone public, but they're just doing it in the private markets. Evernote is one company that Fidelity, namely, has invested in, and it's been remarking its position over the last several months, and that's drawn a lot of hand-wringing by companies where they've been selling shares to the likes of Fidelity. I'm wondering how much attention you think we should even be paying to what the Fidelities and the T. Rowe's say the company you founded is worth.
Well, I think some attention. These are really smart investors. They have a good pulse on where public markets are going to be. And part of what was attractive about delaying going public and getting these crossover investors is that you can get a couple more years of growth before you're public. But now if these companies are changing their prices and positions, I think startup CEOs have to reevaluate whether or not it's actually attractive to stay private longer or just to go out publicly. So all of this is the back and forth that'll change the speed over the next couple of years.
Phil, one of the arguments for why companies ought to look to go public, at least relatively earlier than they're trying to right now, is that they're subject to public market discipline. They actually have to show growth. They have to appeal to a wide constituency of investors. Do you think that that's a valid criticism? In other words, if a company is private and you have rounds and rounds of private venture capital investors in there, do they not really get to go out there without the training wheels and operate in the real world?
Well, I think there's a trade-off. So there's definitely a timing disconnect between the decision cycle of tech companies and the decision cycles of public markets. Public markets are reacting quicker and quicker, right? Their time horizon for making decisions is shrinking. It's not a year in the future. It's not a quarter in the future. It's sometimes minute to minute and second by second. Technology companies need to be making investment decisions that are often years in the future. So there's definitely a period where it's important to stay private just so that you can make longer term investments, because they sometimes take years to pay out. But right, at some point, once you're mature enough, you definitely should go public and be subject to that kind of scrutiny.
How long will it take to see payoff on chatbots?
Well, I think actually the world is about to be rewritten, and conversational UIs and bots are going to be a big part of the future. The key word here is, I think, cognitive ergonomics. We are going to be making products over the next few years that fit much more naturally into the way the human brain actually wants to work. So you're going to see many, many things change.
The cognitive ergonomics, yes, the predictive technology. It's so scary, though, when you see something typing what you were thinking of saying.
It is. I think all new technologies have an element of being a little bit scary. And I think it's easier to see the downsides than the upsides, because the upsides, the potential, requires a lot more imagination. But in every point in the past, new technology has had many more upsides than downsides. Now, there's always going to be wrong steps. The recent Microsoft Hey bot is a great example of a general purpose bot just being totally not ready for prime time. A lot of these general purpose AIs, the ones that try to mimic a human, they're literally stupid. Like, they're just not ready. The technology isn't there yet. But for specific areas, for using a bot to book your travel or help you with productivity or do group purchasing, for specific areas, I think they make a ton of sense right now.